Well, it's time now to turn our attention over to the markets. This week, we were joined on Wednesday afternoon by Central Valley Ag's Luke Beckman. Here's our conversation. Well, let's talk about the latest activity. I think we'll kind of divide this conversation into two pieces. Starting on the corn front, it's the Black Sea saga, I think are the words you wrote when summarizing all the latest, what's happening between Russia and Ukraine. I guess the question I want to toss to you is what's important for these markets? What are you tracking that you think producers should be aware of?
Yeah, so it's been a year and a half since Russia invaded Ukraine, and it seems like a lot of the steam came off that story. A year ago, we kind of peaked with the excitement in the summer of 22, and things took a little bit of a turn here in the last few weeks with the grain deal not being extended by Russia. And in the last week, we've seen some deliberate attacks on port facilities over in Ukraine by the Russians. So it really feels like maybe things are escalating again. Ukraine exports a lot of grain out of that region, primarily wheat, other feed grains, and that also includes corn and some oil seeds as well. And so Russia competes for those same exports. Certainly feels like they're trying to take out some of that export capacity to require global buyers to maybe go through Russia if they want, to secure grains in that part of the world for freight reasons or whatever. Also feels like a lever that Russia is trying to impose as they negotiate and try to get things that they want done as part of the negotiations with Western countries. So we've seen it escalate. The market responded. Market's been a little bit, has not been very sensitive to Russian storylines here in the last several months. And so interesting to see the markets respond in the way that they did. I think a part of that was that this market was short. If you look at managed money a week ago Friday, continued to be short the corn market. So when you see these types of things happen, they get a little bit uncomfortable and you see some short covering rallies. That's what developed in the corn market. And technically we went right to our 62% retracement level. And as of Wednesday's close, that's where we failed and we've started to retreat.
All right, staying here in the U.S. with corn, how much is this market looking at the supply and demand equation? Supply, of course, people trying to guess what might be happening with the national yield, and on the demand front, doesn't seem like exports are very hot right now, are they?
No, I mean, really the same themes are alive and well, Bryce. I mean, this market got surprised by the size of the corn acres on June 30th. That's not going to change as we go forward potentially until, January of 24. So we're stuck with that number. So now it's really about the yield. We're going to get the USDA's first satellite-based yield estimate August 11th. That's the next time we see the WASDE report. Until then, we're monitoring weather forecasts. We're certainly going through some heat here this week, but the markets trade forecasts more than they trade what we're living in the here and now. So we need to monitor that going forward. You can run the numbers in the balance sheet, and you really need a national corn yield at 170 or less to really get this carry out a chance of getting below 2 billion bushels. And even at that, we're going to have stocks to use ratios at 12 to 13%. And so those types of numbers just do not support $6 corn. So as we get these rallies like we saw this last week, it's really feel like selling opportunities for producers to get some additional sales on, whether that's old crop or new crop, because that's just the reality. Demand, at least in the early part of the 23-24 marketing year, just won't be stellar on the export front as it stands today. We're dealing with that really large Brazilian safrinha crop that's currently on the market or coming onto the market right now. So producers need to be aware of that. That is a change as we go forward.
All right, Luke, well, let's shift kind of over to soybeans. Carry that theme over with the equation. You put that using that same equation on the soybean side, I guess, what are the price levels you're seeing there for support?
Yeah, soybeans are a different story, Bryce. I mean, really, you look at the corn and soybean markets and different setups, and it really goes back to June 30th. We got the bearish acreage surprise in corn, but it was a bullish acreage surprise in soybeans. And it really necessitates that we need to see a good national yield in order to support the balance sheet. USDA had to incorporate those acreage numbers in their July WASDE report. And in order to make the numbers work, they got pretty aggressive at cutting new crop demand. And so as we go forward, if we see, any type of yield cuts, maybe with some tougher weather as we get into August across the country, If they start to cut that yield number, expect that they're going to continue to cut new crop export demand. But at some point, the market's going to get a little bit concerned with how tight that soybean balance sheet gets. And so if you go look at a soybean commodity chart, you're really going to see that the prices, bottomed out right around that June 30th report, and we've done nothing but trade higher since. So the market's going to be very sensitive to that. You're going to get a stocks to use ratio that's very tight for new crop beans, and that really creates some interesting price possibilities. So we really need to watch the weather over the next 4 weeks in the soybean market. But the same theme that we saw in corn as far as exports actually is true with beans as well. Large Brazilian, large South American crop that we're going to have to deal with, and that's going to bleed into the U.S. harvest. And so while the futures market might be a little bit excited, I would advertise to producers to expect weaker basis values at harvest time this year compared to what they've come to expect the last couple of years.
That's obvious in the soybean front. You're talking about similar story though for corn as well when it comes to basis, Luke.
Yeah, we've talked to a lot of producers who are anticipating that we're going to see a repeat of this last year as far as how basis is going to behave in the year ahead. We saw 50 to a dollar over a lot this past year in the Western Corn Belt. It does not feel like that's going to be the case this year. Why? Key reason is the Western feed markets have better crops locally. They're really what drove the euphoria last year, where we saw incredibly strong values that were maintained all of last year. But those markets are in better shape this year, and combined with a weak export program, there's going to be plenty of bushels sitting around to satisfy local demand. So I would advertise to producers to expect more typical basis values as we get into the 2023 harvest.
All righty, we'll keep an eye on it. Luke, thanks for joining us this week. We do appreciate it.
Thanks for having me on.